Good evening everyone and welcome to session recap 24 of April 2017. Today we go with 5 of course different setups, and later I will take a look at other pairs. If you want I can take a look at gold, but just don't over risk now. At this point we have big volatility in the markets that is of course caused by French elections and Mr. Emmanuel Macron winning the first round as predicted. So last week some of our session recap trades went in profits. Overall we have been positive, but also we had some losing trades. For our analysis, you could read on Admiral Markets website. We had a very good run, especially with dollar CAD that really turned into profits. And if you follow me on Twitter, I already tweeted about it. So a lot of good trade setups, especially our dollar CAD. Then if you traded the elections, I personally traded Euro GBP. Well, you could see some nice pips because our targets have been met from pre-analysis. I personally am satisfied with market how it's acting at this point. So, but we must not forget about risks involved with the second round of French elections. Okay. So, just wanted to show you before I proceed with webinar. This was dollar CAD. And I really hope that you took the analysis April 20, you see here, and price dropped down here actually, and it went up. So this was actually the analysis that I did on Thursday, but before the elections, and today the price hit our POC zone and went upside. So it was a very good trade. And I also tweeted, I took personally this setup that I analyzed. Okay, so before we begin, standard disclaimer explaining that online educational materials are available by Admiral Markets Estonia for a global audience. So take into consideration that information in this session is not suitable for everyone. So if you want to get a corresponding information on charting conditions and any other detail, please visit admiralmarketsglobal.com. This webinar is for informational and educational purposes only. There is a disclosure statement stating all possibilities associated with Forex market. By accepting the risk, you're also proceeding further with me. Okay, and the last thing is, this is what happened during the previous week. Euro dollar positional trade minus 45 pips, pound dollar positional trade 145 pips, and for some traders it went even higher because pound dollar was definitely the trade of the week, and it produced even more pips than I originally put into the table. Pound dollar, then we have a revised setup. Basically I gave you another setup just a day or two after pound dollar rejected. 70 pips Australian dollar, minus 50 Australian dollar. Well, this was alternative, but we didn't count it. Pound yen positional 105 pips, euro yen positional minus 40, total pips pool 90, 160 revised if you took both of trades from session recap and revised trade. Again, if you didn't take revised trade, 90 pips overall among all of these trade setups. So everything is fine. Hazelkopf is saying hello Nana and the gang. Angel is saying I'm sorry for being late. No problem, everything is fine. We didn't see anything new, so I will go with rules and setups, and then of course I will show you past week results. Then we will proceed with this week's setups. As always guys, give price a breathing room, and you can enter within 15 pips of the predicted level if it's in agreement with your system. It's called POC or buffer zone. You can use scaling in if you wish, but don't forget that you do your own trade and money management. You need to respect your stop loss always guys. That's primary, okay? You need to respect your stop loss because your stop loss determines how much of a risk you take with a trade. If you risk too much, then have in mind that you can earn too much, but it won't be trading, professional trading. That would be probably some sort of gambling. But don't forget that even gambling is, of course, possible with our Forex market, because you still have much higher chance to win than if you take trades simply based on casino odds. Okay, so I always say gamblers are welcome to trade in Forex market always, as long as they really don't mind about risk involved. And it's always like that. I mean, if you take a big risk, you can either make nice profits, or you can actually then grieve because you actually made a loss. My trade that I took was definitely the trade of the week, was Euro GBP. I tweeted about it. I also put it in the video that I recorded, and you can check tweets and my Facebook page. And definitely Euro GBP for me was the best trade. Of course, guys, I know that you might have taken a Euro dollar trade, because Euro dollar was also a good trade. If you took a if you counted that Mr. Macron would win the first round, so if you took Euro dollar trade, you would have made some nice pips, because Euro dollar had a gap. Okay. And Euro Yen also, today we saw a nice retracement, so I'm planning again to buy Euro Yen. I will show you that later. Yes, for some people gold was also very good trade. I don't particularly trade gold. I trade Forex pairs, but I know to analyze, of course, gold and indices. But I'm most comfortable with Forex pairs at this point. Of course, with trading, because, you know, guys, trading and analysis is not the same. I personally want my analysis to be the same as trading. That is why I very occasionally I take my own setups and trade. So what you read is what I trade too. Okay, let's go with rules and setups. Add a spread to your stop loss, even if you trade via ECN account at 2 to 5 pips spread, depending on the pair traded. We take only one position per listed pair. It's either positional or alternative trade, whichever hits first. Don't forget that first touch of the zone is the most profitable. That is why we need to focus on the first touch. Okay? The first touch in the zone is always the most profitable. That is why institutional traders usually get in the trade first. Bank traders, hedge fund traders, okay, they always move the price. They are first in the price, so you want to follow them. You don't want to follow retail traders. That is what I have been teaching you, how to trade, to follow institutions and big money. Positional trades are trend trades. Alternative trades are counter trend trades. Breakout trades and scalp trade levels can be traded independently of any position. Don't forget it. Depending on time and volatility, we use profit stop after 20 pips, not less. So the least amount of pips that we want to take is 20 pips. Sometimes, guys, we can take less than 20 pips, but it's only if you see, let's say, if you see that pairs don't move, and that you might not be able to make any profits because pair is ranging, or is started to get back in the zone, so then you might, well, close it for a little bit less than 20 pips. Pay attention to my Twitter updates. Okay, Twitter updates, very important. Follow me on Twitter, don't forget to do it. Scalp trade should be done at or very close to important support resistance levels. All my setups are calculated by historical levels and Camarilla. Also add these levels to your system. Those are very strong levels, and pay attention to trends, so you might find other trend-based entries. And don't forget that pips pool is the maximum available number of pips you could have got on recap entries. Also, guys, one notice to you, I will show you the screen right away. We will also talk about trading the second round of French elections, of course. And guys, I mean, if you are really keen to trade it and you are on the right side of the market, then it's actually a great thing, because you should be able to make nice profits from these volatile moves. This is French presidential election roundup and how to trade post-election. It's scheduled for May 8th, So this is actually session recap, okay? But we will use French election setups, okay? So you need guys to sign up for this. Don't do it right now so you don't forget. Second round of elections, okay? Of course, at this point, we expect Mr. Macron to win. Based on pre-polls and pre-polling, I will definitely assess the analysis and I will give you setups that we really should trade and make some profits. Okay, that is for May 8th. Until then, well, you see, until then, it will be, well, as I say, probably markets will be ranging. Some pairs will move, some pairs will not, but definitely we should have some volatility just after. I mean, this is very important for European Union, so I think that volatility will be high again, so let's see. What we could see maybe is a retrace, then another longs on euro dollar or euro crosses. We will see, okay? Until then, of course, just read my daily analysis and visit webinars, so you should be fine. Okay, and the last thing, the term pips pool is the maximum available number of pips you could have got on recap entries. This was euro dollar, so euro dollar was a loss before we actually, exactly at our zone to sell, 0.690, it started to reject a little bit. You see, guys, here, I mean, again, this was the zone to sell, and you see the reaction. I mean, the reaction was not that strong, right? You see this candle actually didn't make it to the downside, but you know, when you see these kind of things, this is ascending scallop pattern. So, well, this went into a loss, but yet then again, if you see this rejecting and not able to proceed further, maybe you can make some counter trend, fast counter trade. Let's say buying from this resistance here, because this was definitely the last line of support before euro dollar went up. You see how it's reacting in this zone. That is again good. So the only thing that I can think of euro dollar to be neutral is get back below this zone, so it could be a sell-off. So I don't think it should happen at this point, because now euro is actually having a backwind from Mr. Macron, and eurozone has some renewed strength. So I just hope that everything will be fine after the elections on the second round. I mean, I must admit, I personally, I'm speaking in my own opinion, I'm a very pro-European Union, so I wouldn't like that anything bad happens, because if something bad happens, then we could see a European Union crash, a euro dollar crash, then all our markets will be very, very hard to trade. Probably we will see some new regulations. It will be totally different, so I'm definitely not keen to see European Union fall apart. Okay, so of course that is my personal opinion, and I always back up my opinion with economic reasons. But of course I think that European Union should have some reforms. Okay, it should change some things. Okay, but guys in Brussels should know about it. I mean, I'm not in the position to decide. If they ask me, I know what I would do, but of course they have their own agenda, and it's still a high politics. From financial perspective, a big crash in European stocks and European Union would definitely have a huge impact to not just forex market, but the industry itself. So that is why I wouldn't like it to happen. Okay, so euro dollar, guys, this was euro dollar setup. Then pound dollar setup here. Pound dollar setup, definitely it started to reject from our POC zone. So for me, this was the trade of the week regarding our session recap setups. Easily, pound dollar was the trade of the week. It came to our POC zone, then it started to reject, and watch the momentum, guys. Momentum was huge. I mean, this is momentum candle, this is momentum candle, these are smaller momentum candles. This pattern is called bullish advance. So whenever you see, it's not white soldiers because they have wicks, so this is rather bullish advance. When you see bullish advance, get ready for next wave of buying. excellent movement by pound dollar. I'm in love in forex market. I've been in love with forex market really since 2007, and definitely here, guys. I mean, why I'm talking that, because this is very clear for me. Watch this. I mean, you don't need to have a master degree in economy, or you don't need to be an expert trader just to see how these momentum candles simply protect the range of the pair. So for me, when I see this, it's very easy to analyze what can happen on next drop. So even though if we don't see a big spike initially, these kind of zones will, in my opinion, and should definitely spike the price, because these are where these are the zones where historical buyers are. So this is where historical buyers usually show up. So in now moment, if it drops, this should be bought into again. Definitely this was the trade setup of the week regarding our session recap. Then I made pound dollar revised setup. This is, guys, the link, so you can if you follow me and my analysis, the first place where I post my analysis and where you could read it is the broker that I trade with. It's of course Admiral Markets, and here you can see pound dollar bullish pennant targeting higher levels. This was the setup, and then what happened? The price dropped below this pennant, came into POC zone, and spiked again. So that is why I call revised setup, because it happened just 2 days after I published the original setup. So you could make double pips here. Australian dollar was a loss. Okay, we always need to be sincere. So we are talking about wins, but we are also talking about losses, because we cannot always win. We need to accept losses, and if we accept losses, it will be much easier for us to comprehend how forex market works, and especially, guys, for you, it will be much easier to understand the implications of bad money management. I am very keen of money management, and as you could see from my Twitter post today, I'm not grieving because I made 135 pips with 0.10 trade on Euro GBP. You need to know that the risk involved with forex and financial market trading before the elections is huge. And I need to tell you guys, the good, very good thing that brokers do, and of course that Admiral Markets did pre-elections, is to cut the leverage to 1.50. So you should not be sad about it, even if you had some nice trades. But simply, guys, that is, in my opinion, I would always give advice to my brokers what they should do before the elections. Having cut the leverage to 150 is one of the best choices for both brokers and you traders. Now, some people might ask why. Simply because by cutting off the leverage before hugely risky events, your broker would protect their own money, of course. Of course, brokers protect themselves by doing that, but also they protect you as a trader, because then your greed and your urge to make fast money is subsided. And of course, even though if you had a bad trade, it should not be that bad because your leverage was cut to 1.50. Again, it's up to you how you manage your money. But don't forget that you have also regulations, and every broker needs to respect regulations from financial authorities such as SISEC or ESIC, or of course FCA. So if they gave a proposal, or if they already give a proposal that leverage should be cut before French elections due to huge risk in the market, then regulated brokers should respect that. Otherwise, it will be very hard. And you know, guys, a lot of companies had bad experience with Brexit, with Black Swan events, and unfortunately, a lot of these companies went into bankruptcy. They totally went bankrupt. So we don't want that to happen, right? So because of that, you need to know that the thing to cut off the leverage to 1.50 is a good thing. That way, broker is also protecting your assets. Okay, in my opinion, this is all what I talk from my personal opinion. This was the right thing to do. So, okay, guys, some people ask me, why, Nenad, if you were so sure about Euro GBP trade, why you traded only 1.10? Because, guys, I was sure in my analysis, but I was not sure what will happen, of course. And then again, I wouldn't really go with higher leverage than it was recommended, because the risk was huge. And I might be a crazy trader enough to actually trade that, because I don't know that a lot of people actually traded and carry over the trade over the weekend. But I am a little bit, I like some kind, from time to time, I like to put at least a little bit of risk into my account just to spice it up and to see how it goes. And definitely it came along with my Razor and Camarilla MACD method. So I was happy, okay, when I saw the outcome, definitely. Okay, pound yen, definitely. This was, guys, this was a typo. So this was actually buy position at 137.20. I forgot to save my PPT after the webinar. So if you watched my previous webinar, this was actually a buy setup, of course, because the price was here and then it went here. So we actually bought it. So 100, okay, I need to check it. Yeah, this was the setup. Selling it from here, then buying it from there. But I forgot to put alternative buy. It doesn't matter, guys. If you took this setup, you would have made 100 pips. But some people actually took alternative setup and they made even more profits. Yes, here, pound yen slide. Thanks, guys, for reminding. It should be okay now. You should watch. You should see pound yen. Okay, and I'm showing pound yen screen. Okay, so you're seeing actually pound yen. Hey, excellent, great. So yeah, okay, so this is basically it. We had a pound yen sell trade from this spot, so we actually sold it. But some people actually took a buy trade opportunity. So whatever, guys, I mean, I counted this because this was my primary setup. I forgot to put alternative setup, but I said it could actually spike from this zone because this was order block. It doesn't matter. Whatever you did, I think you did the right choice. If you only followed primary trade, that was pound yen sell, you could make some profits. Really, this was one of the best trades. I mean, it was not, initially it went down, but then again, guys, you know what happened. Miss May actually announced a possible snap election in UK, so pound actually soared after the announcement, and well, it still has a gap, but definitely it went up high. So I think that the pound yen is also bought on dips. Euro yen setup, initially, guys, Euro yen setup went into a loss. So position sell was not that good because it started to reject. It made some 15 pips, but we cannot count this small rejection, so it went initially in a loss. But yet again, if you took a euro dollar or euro yen before the election, again, you could have made some nice money. So what could happen with euro dollar at this point? I would go with longs and I would go with sell. Now some people might ask, isn't it too high to buy? Yes, so that is why we need the retracement. At this point, I'm watching retracement around 0.760 or exactly at 0.730 where we see a gap. So if you read my analysis, what could happen after the election on as trader blog, then you maybe you considered, still it's risky, but I know maybe you consider buying, because this was what I said it could happen if Macron win or Le Pen loses, because For me, definitely these elections are binary. Le Pen, not Le Pen, Le Pen loss, Le Pen victory, we had Le Pen loss. So if you made a bet that Macron would win, this is where you should have booked your profits. So this was the article that it is. So yet again, I think that euro dollar is really bought on dips at this point, and you just need to be careful because you don't want to get caught into a slow grind towards POC zone, because now we have a big range thanks to French elections. Now the range on most currency pairs has been widened, so that is why we need to be very careful about placing positional trades that are not undergoing strong retracement. So even though you might think that euro dollar could go up from this point, and I say yes, it might, because you see, guys, on our charts, I mean, this is very, very bullish, right? You have again some sort of pennant, but don't forget that this pennant can also be bearish, right? Because if this is a pole, this is sort of pennant, so this could drop, right? So it could straight go to our POC zone. So that is why I'm counting on buying the dip. I will not buy here, whatever happens. I will buy there. So that is why I'm waiting some sort of a dip before I can actually make some intraday positional trade on euro dollar. So euro dollar for me is buy 760 or eventually buy 730. I cannot say one of these. Maybe I think that it could be bought from 0.760, because guys, if you watch this is a pole, this is a pennant. So if we actually add the height of this pennant to the breakout point, if it happens, we see that the price could actually drop here. Now if we get a retracement here on our charts, you see it's 61.8, it's EMA 89, it's H3, weekly Camarilla, it's order block, previous double top. So I will probably make a pending order here. Jake is saying there is a very good chance Le Pen wins. I mean, at least according to polls, there is 62% of chance that Macron will win the second round. He also got backed up by Fillon, who is also backing European Union. Mélenchon, who is actually a communist, he hasn't backed up anyone. So I guess at least according to polls, Ipsos and other polls were very successful in their predictions. So if we follow the accuracy of the first round pre-polling, I might say that the second round Macron will win, but I am not sure into anything. Yes, I mean, everyone, it's not the same as Brexit and Trump, because guys, if you remember, it was a very small margin between Brexit and Trump. Remember, guys, there was a couple % margin, but Ipsos was pretty much very accurate before, because most of the polls actually went with Le Pen giving a slight advantage in the first round. So Le Pen made like 1% of advantage in the first round. And Ipsos and other agencies, I think Ipsos, they made a pre-poll announcing that Macron will win with 2% of divergence, of deviation. So actually what happened was that 2% of Macron advantage over Le Pen. But of course, guys, I mean, it's 62-38 at this point. We will see what will happen during the course of these 2 weeks. But we cannot have any guarantee, because after Brexit and after Trump, I am not sure into anything, even if the pre-polling is that accurate. And definitely, in my opinion, French elections pre-polling and pre-predictions were much more accurate than Brexit and Trump. I was very, very carefully following polls, and that is what I wanted to avoid. I wanted to avoid that unnecessary, how can I say, unnecessary risk that is involved with the second round. And unnecessary risk could only happen, for me, in my opinion, if we see some terrorist attack before round 2. I certainly will, first, as a human being, I wouldn't like that some things such as terrorist attack happen. And again, as a trader and as a person who backs up European Union, I would not definitely like to see something happening before the election day. If we see pre-polling of 62-38 at this point, exactly that should happen in my opinion. But we are not, I mean, we don't know for sure. It's a big risk, and it does not necessarily mean that I'm backing up Macron personally, but what I think is that he will have at least huge amount of things to do when he becomes president. It will not, if he of course becomes a president, it will not be an easy job, and it will not be an easy task, but definitely it will not ruin the markets. I'm really scared that Le Pen would ruin the industry, the markets, and European Union as a whole. So that is why I personally would like to see calmness, at least going with predictions. And I'm not saying that it will help France, because it still might help France in the long run. But European Union at this point is well aware of all risk associated with right-wing populists. So that is why I think give it a chance. Let's see what will happen. No one will be ruined in next 3 or 4 years if he follows the course of European Union. But I hope that some things will also change in European Union for the better. So that is why I would like to see at least volatility in the right direction, guys. And that means going with the flow, okay? Going with the flow of the first round. So this is what I think could happen. Positional buy on euro-dollar, alternative buy on euro-dollar here. So watch for this. This is the first setup. This is the second setup. Alternative sell is 0.920. Okay, so if euro-dollar went, if euro-dollar went here, okay, around 0.9520 as it was yesterday, I think it could reject downwards. So that is why I'm thinking to buy here. Maybe make some profits. If I don't see going it above this pennant, then I would close my trade, and then I would buy again here at retail gap close. Okay, so here, okay, this is the second possible buy position in the market. Ignacio is asking, alternative buy euro-dollar will be activated when stop loss hits. No, of course not. I mean, it can be twofold. If this rejects to the upside, watch for 1.0840. If the pair cannot break 0.840, you can take profits from here. If it drops instantly, then of course this setup will not be valid, so it will be a loss and you can open another buy. How I will do this? I would put 0.5 risk on this trade. If I'm good, great. Then I will take another setup. If I'm in profit, I will close as I already explained. But if I took a loss instantly, then I would make, okay, 0.730, another 0.5% of trade. So actually I would be risking 1% for both of these trades. You need to understand the principle of money management, guys, because that is the only way how you can make long-term success in Forex trading. alternative sell 0.920, only there I would dare to sell euro. Pound dollar, I would go with positional buy trade around 27.45. It might happen soon. It might happen maybe during the course of Asian session, and stop loss would be around 27.00. The target price would be around 29.10. Okay, TP stop loss is 27.00. Add 2 to 3 pips, of course, depending on your account type, but I usually add 3 to 5 pips. And alternative sell could kick in around 29.10 with stop loss 29.45 and with TP of 29.20. Okay, so this is GBP dollar. Let's see GBP dollar. Okay, give me the screen. 27.45 here. I would like to see a little bit more of downside, although this is a POC, guys. Simply I explained. Watch this. This is a POC zone. But yet again, I would like it a little bit lower, guys. You know that I'm comfortable with a little bit more of retracement. If we take a previous swing into account, okay, we can see that actually a little bit lower is the way to maybe get some nice profits. Just a little bit here. Pivot point, ATR, weekly pivot point. It's also close to 38.2. So if we have a strong trend, then it could reject, go up. If the trend is weaker, it will start to reject. But I would take my chances here. 27.45. Around 27.45, 55 to 60, of course. And if you could also go for 27.30. So 27.45 means 1.2730 to 1.2760, as I already explained. This is our buffer zone. Okay, this is the median point. Guys, I will explain and I will answer your questions just after I finish with presentation. So please bear with me. 29.10 is a sell, and why 29.10? Okay, because I think that this range hasn't been retested. So if the price spikes up, it will be a retest. You see, this is the first touch. There was no retest. This is range. So if we see a bounce, I think that we also will see now moment sellers from this zone. And it's also H3 weekly Camarilla resistance. Australian dollar ranging, guys. Also be careful because on Wednesday you will see CPI data. Australian dollar ranging position buy 7530, 7500 stop. 7610 is TP, sell 7610. Stop 7650 and TP is 7530. Okay, here 7530, positional buy trade. Okay, here we have retracement 7530. Okay, here you see what happened here. So we could see rejections, then we would drop this trend line that would perfectly fit here if we see a rejection. At this point, this is it. So it could start rejecting here. It's still our POC zone. So EMA 89, trend line, ATR low, pivot 50, retracement, previous buyers. So a lot of confluence here. So that is why I'm counting. For me, iron ore also is very bearish at this point. So iron ore is actually leading the price now for Australian dollar. But I think that at least judging from current, guys, watch ATR. I mean, this is range. Watch this. Up, down, up, down, up, down. This is not a clear downtrend. To me, this doesn't look like a clear downtrend. This looks like a small range. And it is. Watch this. ATR, okay, of last 14 days. $47 pips. Funny, right? So this is where I think Australian dollar could spike, but be careful and pay attention to CPI, okay, on Wednesday. Pound yen uptrend, 39.80 buy position. 39.30 stop loss, 41.00 is target. Pound yen could actually come maybe during the Asian session within the reach of our zone. Then we have a steep line now here. You see it's a bit steep, but if it gets there, it will be like this if it starts to reject. And also don't forget about order block here. So that is what I see. This zone could reject the pair, okay? And equities, if they were bullish, okay, it would definitely be positive for pound yen. And finally, euro yen. We have different setups on euro yen. Possible buy position 117.55, stop loss 116.85, TP 199.9. Oof, yeah, this is 119.90 and TP is 120.30. So yes, this is a typo. 119.90. Yeah. So I think euro yen is bought on dips, and at this point it's undergoing a retracement. Yeah, Ilya is saying 199 end of Japan. Yes, that would spill the end probably. I mean, this funny indeed. Yeah, this typo is very, very nasty. Yeah, but 119.90. I already did, guys, the analysis. So it was published today on. I tweeted immediately when it was published. It was a Forex Empire here, exclusive analysis. So I mean, I still think that this is a retracement, and if it gets down, it could reject. And also, guys, there is. Let me show you just a few seconds. The analysis that I did today was, yeah, on euro dollar. So here on technical analysis, yeah, euro yen was here on Admiral Markets website, and euro dollar was on Forex Empire. Yeah, so this was it. Euro yen on Admiral, and on Forex Empire it was euro dollar. So let's go with quick questions, guys. We don't have much time left. The question for gold, Angel was asking for gold. Let's see the gold. Okay, the question was, can you look gold? Do you think gap is end of correction? Okay, let's see what it says here. I think that if gap is closed, okay, here, if we see a close of the gap, then we could see a probably rejection towards L3. So if it closes the gap, okay, this could come here. So this could be a next selling zone. At this point, if you are in a trade, I advise you to scale out and leave your trade, because maybe the pair, maybe the gold will close the gap. But have in mind that this is close to resistance now. If it doesn't break a resistance, it could be definitely a runaway gap, and that is not good. So you could be caught into the gap. Okay, the question is dollar yen. Yes, I will show you dollar yen right away. Again, guys, all these pairs have a gap on them. So you need to actually wait until gaps are closed or the pair comes in the vicinity of a gap. Andy, I will explain why I call it retail gap. Because in short, Forex market is live 24/7. Retail market is live 24/5. So in Forex world, there is no gap. There is only gaps in retail world. Okay? Market is alive 24/7. You as a trader, you're able to trade until Friday, so 24/5. During weekend, price is here. Okay? There is interbank market and price is here. When market opens, it opens with a gap. But interbank market does not have a gap. That is why I call it a retail gap. Market never sleeps, but retail market sleeps 2 times per week. Okay? I hope I explain now. So here, if the pair gets there to H3, okay, this is order block, this is H3, this is below the bottom of ATR projection, EMA 89, gap close, look for longs here. I think it could go up. Next question is dollar Mexican peso. Let's see, I don't think I have dollar Mexican peso here on this platform. Yeah. Let's just check. I know it's on ECN, but I don't see it here. Yeah, no peso unfortunately here, Vito. Eric is asking how euro yen not in gap. Well, that is when market opened, price was obviously here, so it spiked up without a gap. I'm still not sure that you understood. Retail gap happens if interbank market goes up in this example before market opens. Euro yen obviously opened here, so there was not a gap in interbank market. Okay? Ilya is asking, do bank traders see gaps on majors? Guys, retail trading from MT4 and other retail platform is not the same as bank trading. They don't use MT4 charts. And bank traders, they have their positions opened. They have their protective stop losses. Okay? So when they take a trade, they always take their risk into account. They're not taking their trades blindly. So if you see no gap on euro yen, it means that on retail 24/7 market, the price was here when it opened. But on euro dollar, we had a gap because the market before our platform opened, it already started to move up during early Asia session or during interbank. No, we cannot see what I see. The only thing what I use to see how the price moves on interbank market is www.xe.com. So there you can see current market trades during the weekend. So if you have a position open during the weekend, you can go to that website and check your positions. So it will usually, you will usually see whether you are in profit or you are actually in a loss. Yeah, that is www.xe.com. That is what you can see during the weekend, how the price moves, or if there is any anything that happens during the weekend. I use that just to check price if I have my trade running. So I knew that my Euro GBP was in profit 2 hours, 3 hours before market opened. Yes, Martin, correct. Okay, guys. Do you have any other question? If you have any other question, any setup for dollar CAD? No, guys, I don't have any setup for dollar CAD, simply because we already had a dollar CAD setup, and now if you traded that setup, you would have been in profits. Okay, so this was the setup that I did on April 20. Okay, here I hope that, as I said, you took the setup, and if you took it, yeah, well, you would be in profit. If you had taken it, you would be in profit. Okay, here, let me show you. Bullish Marubozu on daily time frame. Here, analytics, technical analysis, April 20. Price went there, it rejected, guys, and you should have been in profit. Jake is asking, are all positions written down somewhere like a blog post on Admiral website? No. These positions that I post here are valid from Monday to Wednesday. Then, Jake, we have a live trading Wednesday session. So these positions should be taken from Monday to early Wednesday. Of course, you need to pay attention to news such as CPI data on Australian dollar. Don't trade this if you're not sure. But also, if you read Admiral Markets website, my POC zone here is actually where you take trades. So, Jake, if the price gets into POC, you should be ready to pull the trigger. That is why I explained lately, point of confluence, the zone where we expect price to react, aka entry zone. So everything is written here on Admiral Markets website. Next question, GBP Australian dollar, Bok Roland. GBP Australian dollar, let's see, okay, GBP AUD. Here, GBP AUD, huge uptrend. The only thing where I would place a buy trade is around this region. I would even go with daily pivots here. No, we cannot go with daily pivots, definitely. So yeah, either here or L5, but it's already rejecting. If it drops, then you would like to see a little bit more of retracement. This is strong order block, so definitely it's bottom dips. Let's see if we have any confluence there. Yes, this is also possible. 67, 86 to 70, and of course this one. So pay attention to these regions. Okay, so here and there, good spike towards this point here. Andy is saying, thanks, Leonard. I want to be like you, great guy. Thank you. You will be, Andy. Just be patient, of course. And WTI, okay, WTI. You see what's happening? Huge downtrend, strong order block here, H4 EM89. This is the zone to sell. I'm sure that it also has some Fibonacci inside it. Of course, 78.6. So WTI sell 78.6, 50.11 is a sell here on WTI. Hazelhoff is saying a nanner for president. Thank you. Well, I'm not sure that I would be good president. But thank you. Bok, thank you to Bok for such great comments. So guys, that was it. I mean, I tried to explain why I am backing up European Union project, of course, with some changes to bureaucracy and to other things. I also explained why I think that France should go with current flow. It should be hard time definitely for France, whoever wins the elections, but at least markets will not be in turmoil and our industry will not suffer, I guess. So I hope that everything will be fine after May 8th. So let's see. Thank you guys for listening. Thank you for your questions and comments. I will be here with you soon. And let's see what will happen on Wednesday, guys. Yes. Thank you, guys. Talk to you soon. Cheers. Trade safe.